Welcome back, the channel where we break down finance and crypto in a way that actually makes sense. If you're someone who wants to understand what's really happening in the market, not just hype and noise, you're in the right place. Today's video is especially important because we just got a brand new XRP rich list, and later in this series, I'll explain exactly how much XRP you realistically need to hold and why that number keeps changing over time. Make sure you stick with me till the end, because this is one of those topics that separates emotional investors from smart, long-term thinkers. A lot of people message me and say the same thing again and again. They say, "You're always bullish on XRP. What would actually make you bearish?" And honestly, that's a fair question. Blind optimism is dangerous in any market, especially crypto. So in this video, I'm going to share one of my biggest short-term concerns around XRP, something that could make me cautious if it actually happens. This isn't fear-mongering. This is real analysis. And if you want to survive and win in this market, you need to understand both sides. Before we go deeper, I just want to say thank you. The support on this channel means a lot. Every subscribe, every comment helps Bullion IQ reach more people who want real financial education, not shortcuts. And if you ever need to buy XRP, I've linked my preferred exchange in the description. Now let's get into the real discussion. I want to start by clearing something up. When people hear bearish, they usually think fundamentals. They think lawsuits, regulations, partnerships failing, or adoption slowing down. And yes, fundamentally, there are always risks. Crypto is not a guaranteed win. XRP is not immune to global economic problems. But here's the key point most people miss. Fundamentals for XRP right now are extremely strong. In fact, they're stronger than they've ever been. That's why my concern is not fundamentally driven. It's technical. From a chart perspective, XRP has been doing something very specific since early 2024. It hasn't collapsed. It hasn't exploded either. It's been moving sideways in a defined range. There is a very strong support zone around the 180 to 190 area, and price has respected this level again and again. At the same time, XRP keeps trying to break above resistance and keeps getting pushed back down. This frustrates people, especially short-term traders. But frustration does not equal failure. Here's where my concern would come in. If XRP were to clearly break below this long-term accumulation zone and lose that support with strong volume, that would tell me something has changed. That would suggest the market is no longer accumulating, but distributing. In simple words, smart money would be exiting, not building. That's when I would start paying very close attention. But we are not there right now. In fact, if you zoom out and remove the emotional noise, the chart tells a very different story. XRP had a major move up in late 2024. Since then, it hasn't crashed. It hasn't retraced to zero. It has been consolidating. Sideways movement after a big move is often a sign of strength, not weakness. Markets need time to cool off, and accumulation is boring by nature. That's why most people lose patience right before the next move. One mistake I see people make is focusing too much on short-term swings. XRP is known for volatility. It moves fast, both up and down. But if you draw a simple upward trend from November 2024 to today, the direction is still higher over time. Nothing about the current structure screams collapse. Until that major support breaks, my long-term bullish bias remains unchanged. Now let me say something important about bias. We all have it. I hold XRP. I believe in XRP. That alone means I have to be extra careful not to twist every piece of information into something bullish. This is where things get interesting. One of the smartest things you can do as an investor is check your thesis against neutral analysis. Recently, someone who is not an XRP supporter asked an AI system to remove the future winner of cross-border payments from a group that included Ripple, Visa, PayPal, and Swift. The AI removed Ripple. Now, does that alone prove XRP will dominate global payments? No. But what it does show is that when you remove emotion and tribal loyalty, the data still points in a similar direction. That matters. I don't invest because I want to be right on Twitter. I invest because I want asymmetric returns. The internet disrupted media, retail, communication, and entertainment. The financial rails are next, and that's where XRP is positioned. Until something meaningfully changes that story, I stay convicted. This is one of the most important concepts in investing, not just crypto, but any asset class. Most people expect excitement all the time. They expect price to move up every week, but that's not how real wealth is built. Wealth is built during boring periods, when nothing seems to be happening and emotions start taking over. When price moves sideways for months, people start doubting everything. They start questioning the fundamentals, the team, the technology, even their own decisions. This is exactly what markets are designed to do. Markets are not designed to reward impatience. They are designed to transfer wealth from emotional hands to disciplined hands. XRP trading sideways is not a sign that it has failed. It's a sign that the market is deciding who really believes in the long-term thesis and who doesn't. If you look back at history, every major asset that went on to do something big had long periods where nothing happened. Amazon traded sideways for years. Apple was considered a boring stock for a very long time. Bitcoin itself spent multiple years going nowhere before explosive moves. The people who won were not the ones who perfectly timed the top and bottom. They were the ones who understood the bigger picture and stayed positioned. This is where fundamentals matter more than charts. Charts tell you where price has been. Fundamentals tell you where value is going. XRP's fundamentals are not weakening, they are strengthening. Adoption discussions, infrastructure development, regulatory clarity compared to past years. All of this points toward progress, not decay. That's why sideways price action doesn't bother me the way it bothers others. Another thing people struggle with is the idea of time. Everyone wants fast results. Crypto has spoiled people with massive gains in short periods, but those phases don't last forever. After big moves, markets need time to reset expectations. XRP had a strong move, and now it's digesting that move. That digestion phase is where smart investors quietly build positions while attention moves elsewhere. Now let's talk about something very practical. Most people don't lose money because they picked the wrong asset. They lose money because they didn't have a plan. They didn't know what they were accumulating for, how much they wanted, or what their time horizon was. This is why the XRP rich list matters so much. It gives you context, it gives you a target, and targets remove emotion. When you know exactly why you're accumulating and what level you're trying to reach, short-term price swings stop controlling your mood. You stop asking, why isn't it going up today? And start asking, am I closer to my goal than I was last month? That mindset shift is everything. Another mistake people make is comparing themselves to whales or early investors. That's not productive. The early days of XRP were a completely different environment. Prices were lower, risk was higher, and information was limited. Today, the asset is more mature, and that maturity comes with higher prices. That doesn't mean opportunity is gone. It just means strategy matters more. What I want you to focus on is positioning, not perfection. You don't need millions of XRP to benefit if XRP succeeds. You need to be in a meaningful percentile relative to the total holder base. This is exactly why percentile thinking is so powerful. It reframes the entire conversation away from price and toward ownership share. And this brings us to another important idea, being priced out. Every asset that succeeds prices people out over time. That's not a bug, it's a feature. Early adopters take the highest risk and get rewarded. Later participants take lower risk but need more capital to achieve the same exposure. This is normal. Complaining about it doesn't change it. Planning around it does. Right now, XRP is still in a phase where many people can realistically accumulate a meaningful position over time. That window will not stay open forever. As price increases, the same number of tokens requires exponentially more capital. This is why waiting for the perfect dip often backfires. The market doesn't wait for comfort. I also want to address fear directly. Fear usually shows up when price isn't moving. People say things like, what if this never takes off? Or what if I wasted years holding this? These thoughts are natural, but they're not signals. They're emotions. And emotions are often strongest right before major moves because that's when uncertainty peaks. The question you should always ask yourself is simple. Has the core thesis changed? If the answer is no, then the plan should not change either. For me, the core thesis around XRP remains intact. The problem it's trying to solve still exists. The market it's targeting is massive, and the technology is still uniquely positioned. This is where we take all the theory we just talked about, accumulation, fundamentals, mindset, and put it into a practical framework you can use right now. One of the biggest questions I get is how much XRP do I actually need to hold to be in a meaningful position? Well, the answer depends on your goals, but the rich list gives us a clear snapshot of where you currently stand relative to the entire XRP network. First, let's start with the top 10% of XRP holders right now. If you own around 2,300 XRP, you're in that group. That's roughly 753,000 people globally. Think about that for a second. If you're someone new to crypto or XRP, 2,300 coins is a very achievable number over time, especially if you're disciplined about accumulating regularly. The key here is consistency. Even small amounts add up, and being in the top 10% already positions you ahead of most holders. That's a strong starting point. Next, we move into the top 5%. To reach this percentile, you need around 8,000 XRP, which has the number of people ahead of you. There are roughly 376,000 holders in this group. This is where accumulation starts to require a bit more strategy. You have to think about when you buy, how you diversify your capital, and how you protect your position from volatility. But again, this is achievable if you're focused and disciplined. You don't need to chase hype. You just need to stick to a consistent plan. Moving further, the top 4% requires about 10,000 XRP, while the top 3% is around 15,000 XRP. This is where you start moving into territory that is both rare and meaningful. Owning this much XRP means you have a real stake in the network. You are now in a position where price movements matter less in terms of emotions and more in terms of strategy. Your position size gives you leverage, not stress, assuming you've bought responsibly over time. Now let's talk about the top 2%, which starts around 23,000 XRP. This is where things get a little more challenging. At current prices, this represents a significant financial commitment, roughly $30,000 or more, depending on market fluctuations. Most new investors can still reach this level over time with careful planning, but it requires patience, discipline, and a long-term mindset. Remember, you're not just buying a token, you're buying a piece of a financial network that has the potential to disrupt global payments. Then there's the top 1%, which is about 48,000 XRP. This is now a serious commitment for almost anyone who isn't an early adopter. The cost is higher, but the reward is also higher if XRP continues its trajectory. You have to be realistic here. Most people entering the market today won't immediately hit this number, and that's okay. Accumulation is a marathon, not a sprint. Beyond that, the 0.5% level is around 86,000 XRP. The 0.2% is 169,000 XRP, and the 0.1% sits at 300,000 XRP. These are typically positions held by OG investors who entered early when XRP was much cheaper. If you're new, these numbers aren't your target unless you're in it for the long haul and can commit significant capital over time. These upper echelons illustrate just how rare the largest holders are, and why being in even the top 5% is already an impressive achievement. Finally, the absolute top, the 0.01%, holds over 3,400,000 XRP. These are the whales who have the most influence over the network, and it's important to understand their impact. Market moves can sometimes feel dramatic because these holders are few, but extremely powerful. However, for most of us, being in the top 10%, 5%, or even 3% is where meaningful participation begins, without needing to risk everything. What I want you to take away from this rich list is this: you don't need to own millions of XRP to win. What matters is relative positioning, consistency, and strategy. Set a target percentile based on what's realistic for your situation. For example, if your goal is to be a top 5% holder, that's 8,000 XRP. Focus on how to get there gradually. Dollar cost averaging, avoiding emotional buying, and staying patient will take you far more reliably than chasing short-term pumps. Remember, price appreciation will make these numbers harder to achieve over time. What was affordable in the early days of XRP is now significantly more expensive. This is why setting a target early and sticking to it is crucial. Being disciplined now puts you in a prime position for the future, long before the market makes it unaffordable for most. Many investors fail not because they picked the wrong asset, but because they didn't have a clear plan to reach their goals. This is where most people go wrong. They either buy sporadically based on hype or panic sell during short-term volatility. Consistency and strategy are what separate successful investors from the rest. First, decide what percentile you want to be in. Do you want to be in the top 10%, top 5%, top 3%? This is the foundation of your strategy. Once you pick a target, everything else becomes measurable. For example, if your goal is to reach the top 5%, you know you need around 8,000 XRP. That's your concrete number, your checkpoint. Without a target, accumulation becomes random and emotionally driven. You might overspend during a hype period or miss opportunities entirely when the price dips. Next, think about timing and dollar cost averaging, DCA. The crypto market is volatile. Prices go up and down, sometimes dramatically, in short periods. Trying to perfectly time the market is a losing strategy for most people. Instead, break your target into smaller portions and buy consistently over time, regardless of short-term price swings. For instance, if you want 8,000 XRP, you might divide it into 16 purchases of 500 XRP over several months. This smooths out volatility, reduces emotional stress, and ensures you're not trying to catch the perfect dip, which rarely works. Another important point is affordability relative to your finances. Accumulation should never jeopardize your personal financial health. This means you need to assess how much capital you can comfortably allocate to XRP without affecting your daily life or emergency funds. The goal is sustainable growth, not gambling. Many people make the mistake of overcommitting, get stressed during dips, and end up selling at a loss. Controlled, disciplined accumulation avoids this trap. It's also crucial to monitor progress relative to your goal, not relative to market hype or social media chatter. Ask yourself, am I closer to my target than last week, or am I meeting my planned accumulation schedule? This removes emotion from the process. People often obsess over price swings or news headlines, but these are distractions. Your focus should be on consistently moving toward your target percentile. Even if the market goes sideways, if you are steadily accumulating, you are winning. Let's also talk about long-term vision versus short-term movements. Being in the top 10%, 5%, or 3% of XRP holders matters more in the context of where XRP could be in 3 to 5 years, not where it is today. Short-term dips may look scary, but they are normal and expected in crypto. The goal of accumulating to a meaningful percentile is to ensure that when XRP grows, your position grows disproportionately. This is why percentile thinking is more powerful than focusing on price alone. Another strategy is understanding market cycles and patience. XRP, like all cryptocurrencies, goes through accumulation, hype, and correction phases. Most new investors panic during corrections. Experienced investors use these times to add strategically to their positions. Being patient during sideways or bearish periods allows you to accumulate more XRP for the same amount of capital. Over time, these disciplined moves compound significantly. Now let's tie this back to the rich list. As we discussed, top 1% holders are very rare, and top 0.5% or 0.1% holders are almost exclusively early adopters. For newer investors, aiming for the top 10% to top 5% is realistic and still extremely powerful. Being in these percentiles provides meaningful exposure to XRP's potential upside without risking an unmanageable amount of capital. You're positioning yourself for long-term gains while staying financially safe. Finally, the key takeaway is focus, consistency, and strategy. Decide on your target percentile. Break it into achievable increments. Buy consistently and ignore emotional noise. Understand that price appreciation will make it harder over time, but disciplined accumulation now puts you in a very strong position for the future. Your goal is not to react to every market movement, but to steadily build a position that could potentially benefit exponentially as XRP grows. What lessons we can learn from them and how you can apply similar principles today. One thing I always emphasize is that investing isn't about luck. It's about discipline, planning, and execution. Those who consistently followed a strategy even when the market was uncertain are the ones who ended up in the top percentiles of XRP holders. Let's start with early adopters. Back when XRP was trading at just a few cents, accumulation wasn't easy in the sense that information was limited. Investors had to research, understand the tech, and trust in a project that wasn't widely recognized. Many of these early holders took calculated risks, skipping short-term gratification, saving consistently, and buying strategically over months and years. Fast forward to today, these investors now sit in the 0.5% to 0.1% holder range, owning hundreds of thousands of XRP. The lesson here is clear. Discipline and patience pay off massively. For newer investors, the environment is different, but the principles remain the same. Prices are higher, meaning the capital required to reach top percentiles is greater, but the strategy doesn't change. You still focus on targeting a percentile, buying consistently, and ignoring short-term noise. For example, someone targeting the top 5% today would need roughly 8,000 XRP. That might cost several thousand depending on the market, but by using dollar cost averaging and not panicking during dips, you can reach this goal over time. The key is to treat XRP as a long-term investment, not a speculative trade. Another important lesson from early adopters is risk management. Many of them didn't overlever or invest money they couldn't afford to lose. This allowed them to hold through volatility without panic selling. If you want to emulate their success, your position should always be sized in a way that you can comfortably weather short-term swings. For example, if you're aiming for 8,000 XRP, don't put all your savings into one purchase. Break it into smaller increments, spread over weeks or months, and adjust as necessary. Psychology is also a major factor. Early adopters often face doubt, skepticism, and social pressure. People around them would question why they were buying an obscure crypto. The difference between those who succeeded and those who didn't often came down to mindset. You need to develop conviction in your thesis, even when others are doubtful. In XRP's case, the fundamentals are solid, a real-world use case, growing adoption, and a strong technical network. Understanding this allows you to focus on accumulation rather than fear. One practical tip is to set clear milestones. Break your goal down into smaller steps and celebrate progress along the way. For instance, if your target is 8,000 XRP, mark milestones at 2,000, 5,000, and finally 8,000. Each milestone is an achievement and a confidence booster. It also makes the process less intimidating and prevents burnout. Accumulation should feel manageable, not overwhelming. It's also important to understand how price appreciation impacts accumulation. As XRP grows in value, it becomes more expensive to reach higher percentiles. What was easy at 25 cents per XRP is significantly more challenging at 180. That's why starting early and committing to a disciplined strategy is critical. The longer you wait, the more capital is required to hit the same target, and the fewer opportunities you'll have to buy at lower prices. Early and consistent accumulation compounds over time. Finally, remember the bigger picture. Accumulating XRP is not just about owning a certain number of coins. It's about positioning yourself in the future financial system. If XRP achieves its potential as a solution for cross-border payments, being in the top percentiles positions you to benefit significantly. You're not just chasing price, you're participating in a network that could fundamentally change how money moves globally. That's why percentile thinking is so powerful. It reframes accumulation as strategic positioning, not speculation. First and foremost, decide your target percentile. This is the foundation of everything we've talked about. Are you aiming for the top 10%, 5%, or even 3%? Your target determines how many XRP you need to hold and guides your entire accumulation strategy. Without a target, you're just buying randomly and leaving your outcome to chance. With a target, every purchase, every allocation, and every decision becomes measurable. For example, if your goal is the top 5%, you know that roughly 8,000 XRP is your checkpoint. That number now becomes your roadmap, not a vague idea of enough. Next, break your goal into smaller, achievable increments. This is critical to avoid stress and emotional decisions. If you're aiming for 8,000 XRP, consider buying in increments of 500 or 1,000 over weeks or months. This approach, called dollar cost averaging, smooths out volatility and prevents you from making impulsive buys during hype periods or panic selling during dips. Consistent accumulation over time beats trying to perfectly time the market, which rarely works, especially in crypto. Another key element is financial discipline, and never commit more than you can afford to lose. This is especially important with XRP's rising price. You want to be able to hold your position through volatility without panic selling. Early adopters who reached the top 0.5% or 0.1% of holders did so by being disciplined, patient, and strategic. You don't need to replicate their position size to be successful. You just need to apply the same discipline, mindset, and strategic approach. Now, let's talk about mindset. One of the biggest challenges for investors is emotion. Fear and impatience often cause people to exit too early or chase the wrong opportunities. Understanding your percentile target, your accumulation strategy, and your long-term thesis helps you stay focused. For example, if XRP is trading sideways or even dropping slightly, ask yourself, does this change my core thesis? If the answer is no, then the market noise is irrelevant. Discipline and conviction are your best tools. It's also critical to monitor progress relative to your goal, not relative to hype or social media chatter. Check. Am I closer to my target than I was last month, rather than did I miss the latest pump? Focusing on measurable progress allows you to build confidence and stay patient, which is exactly how early successful XRP investors approach the market. Another factor is timing and opportunity cost. XRP is becoming more expensive over time, which means later accumulation requires more capital. Starting now, even with smaller amounts, positions you for long-term success. Don't wait for the perfect dip. Accumulation is about strategy, not luck. Even a consistent 2 to 3% of your capital allocated weekly or monthly can compound meaningfully over time, moving you steadily toward your target percentile. Finally, think about the bigger picture. XRP is not just a token. It's part of a growing financial infrastructure aiming to revolutionize cross-border payments. Being in the top 5% or top 3% of holders means you have a meaningful stake in this network. Percentile thinking reframes accumulation from chasing price to positioning for future impact and asymmetric returns. The early adopters didn't just hold XRP. They believed in its mission and understood its potential. Today, we can follow the same disciplined approach even if entry prices are higher. In summary, here's your roadmap. Choose your percentile target. Break it into manageable increments. By consistently using dollar cost averaging, monitor progress relative to your goal, stay disciplined through volatility, and maintain conviction in your long-term thesis. Stick to this approach, and you are far more likely to end up in a strong position, ready to benefit from XRP's potential upside, while avoiding the pitfalls of emotional decision-making. This concludes our full breakdown of XRP accumulation, the rich list, and strategy for investors. By understanding your target, controlling your actions, and focusing on long-term positioning rather than short-term price swings, you can confidently navigate the XRP market and build a meaningful stake in one of crypto's most promising assets.